Harmonic Trader Education, Harmonic Trading, Certified Webinar Series, courtesy of HarmonicTrader.com. I want to go through a quick concept of what constitutes a harmonic breakout. When a pattern fails, it's a pretty clear setup. How do we detect that early, and what are the proper expectations beyond that failure may we see? And in a lot of situations, you do see the continuation of the predominant trend well beyond where the projected pattern completion point may exist. Now, looking at this example here of the pound on a 60-minute, clearly had a really nice bearish butterfly setup. Great 786 at the B point. That sets up the entire structure for the butterfly, of course, at the 127. Now looking up at that 127, here's the PRZ, potential reversal zone. That's at 5630, 1.5630. 5635, the top side of that whole zone. So pattern you would consider complete on this price bar right there, and that's called the terminal price bar. Now, any decisions beyond that, beyond whether or not this is valid, have to occur after that pattern completes, and there's several ways to break that down, but for simplicity's sake, just taking a look at the action immediately following is that early gauge, that early indication that beyond this zone here, we need to see trend breakdown, need to see some type of price character of reversal behavior early on, immediately after this entire zone is tested. But that doesn't happen, and usually within 2 or 3 price bars. That's all you need. If you don't get that desired action, and from a time perspective, that's usually 5% of the total zone of the pattern, and I'll go over that in a second. But really, it doesn't take much. If you're not recognizing that, if you're not seeing that you're getting price action or reversal behavior immediately following the completion of a pattern, then the pattern is not going to work. So what happens? What do you expect beyond that? Beyond that, you have to follow simple uptrend considerations, and you need to see each price bar, each time interval, whether it's 60-minute or daily, form a progression of continuation. In this case, it would be higher, of higher highs, higher lows, and then any immediate breakdown of a prior high or prior low would signal some kind of warning. Usually I look at this range of ratios in terms of gauging breakout scenarios and how far certain extensions and certain continuations of trend may persist. Usually I keep a target of a 1618 extension beyond any pattern, retracement pattern or extension pattern. But once that 1618 is violated, then you're going to see some type of accelerated nature. Now, this is just simply based off of the prior downtrend projection where the butterfly failed. So once the butterfly fails, then you look at the 1618 to 2.0 zone as the first or the next likely stop before anything higher. But if you get a firm acceleration, not uncommon to continue as far as a 314. But beyond a 314, especially for shorter term time frame traders, you're going to see some type of price reaction. So pretty important to just recognize that from a structural basis, that if we're looking at this opportunity and Forget even the failed bearish structure. Really, the price action at where the pattern completes is a whole different argument. And in a lot of cases, when it does fail and when clear structures don't yield that reversal and they're clear continuation of the predominant trend, usually signal an early point within the overall progress of the entire trend, where you can have a bias of the predominant trend that's persisting. So in this case, a bullish upside move with a failed short-term pattern would definitely indicate that there's strength at hand. So there are many variations that must be considered, but from a harmonic trading standpoint, really within the first few price bars after a pattern completes, there should be some type of reactive consideration that will give the early validity of whether or not a structure is going to work out. And it's a simplistic statement, it's oversimplified, but it's a starting point for where we even consider some type of entry for an execution. Now, in this case, if we were looking to short the bearish pattern and sell the bearish butterfly at 156.33, call it 156.35, immediately thereafter we should see some type of reaction, but actually the price does not give us anything. So this might even be a situation where your execution is stopped out pretty quickly with a pretty frustrating experience. But the real precision execution would have actually realized that this point here, where the arrow completes, where the price bar tested all the numbers in the zone, gave really early indication that it continued higher and was unable to give any kind of sign of reversal at hand. So at a minimum, there would be caution there, and it is important to place that type of emphasis on price action immediately following the completion of larger structures, that they have to be demonstrative in what the pattern is suggesting. So for more information on this, invite you to visit harmonictrader.com and enjoy the entire complete seminar series that explains all these concepts and more.